Governments always say, we're working for your financial freedom, self-improvement, growth, opportunities. Nice words. But when you take a closer look at history, you'll see there's a darker side to it. In reality, governments always do the same thing. While keeping people indebted and dependent, they gather all the money and power for themselves. And the most interesting part, these tricks aren't new. For centuries, they've been running the same scams over and over, just changing their names. But the goal has always been the same: move the wealth upward, keep the people poor. Let's start with the oldest trick, inflation. When governments spend more than they collect in taxes, there are only two ways. Either they honestly say, we're raising taxes, which is politically risky, or they quietly devalue the currency. Your money stays the same, but its purchasing power drops. The Roman Empire was a master of this. In the 3rd century AD, emperors began reducing the silver content in coins to pay for wars. What was once almost pure silver, denarius eventually became copper with just a thin silver coating. To make sure people wouldn't notice, they said, everything's normal, but everyone paid the price. Prices skyrocketed, wages couldn't keep up, savings turned to dust. In short, people were silently robbed through a hidden tax. Today the same thing happens through central banks. Only the name has changed. In the Middle Ages, things were a bit different. Back then, kings went to wealthy merchants and guilds and said, lend money to the state. Of course, this wasn't a voluntary loan. Those who refused faced severe punishment. Sometimes there were promises of repayment with interest, but usually it came late, in devalued currency, or not at all. In the end, kings continued their wars and their palaces, while merchants were forced to lose their capital. The trick was simple, but effective. Make coercion look like patriotism. By the 17th century, the system itself had become a scam. When the Bank of England was founded in 1694, it wasn't out of charity. The government needed money to fight France. The rich lent money to the state, and the state promised them interest. But who do you think paid that interest? Of course, the people, through taxes on salt, beer, and fabric. So, the rich lent money to the state and got guaranteed interest. The poor paid higher taxes to cover those interests. This was actually the transfer of wealth from the public to the rich, under the fancy name of national finance, and this system still continues today, coming to the present. The same game goes on with modern names: budget deficit, stimulus package, bailout. Governments take on huge debts claiming it's for the people, for infrastructure. But most of the money goes to defense contractors, big corporations, and banks. Then, to pay back the debt, they raise taxes, cut social support, or devalue money. So again, the burden falls on the people, while the profit goes to the bondholders. Remember the 2008 crisis. Banks took ridiculous risks and crashed the system. Then the government said, let's save the banks or the system will collapse. And who paid for the rescue? Of course we did. The people. And who got saved? The same banks. In short, profits are private, losses are public. Pension systems tell the same story. People trust the state and pay contributions for years, but that money isn't saved. It's spent immediately. All that's left in the state's vault are papers saying to be paid in the future. That's basically an intergenerational Ponzi scheme. When the population ages, the system collapses. Then they call it a reform, but that usually means less pay, later retirement. Everything is built on perception. Inflation is called growth. Forced debt is called patriotism. Borrowing is called investment. Bailouts are called stability. Pension cuts are called reform. But behind the curtain, it's always the same story. Wealth moves up, people move down. And the reason this trick works so well is that most people don't know economic history. That's why they don't see the game. After 2008, a new term appeared: quantitative easing. Central banks created trillions of dollars out of thin air, buying government bonds and mortgages. They said, if this system collapses, we all go down. The system was saved, but for whom? For the rich. Stocks, real estate, and bonds skyrocketed, but those assets were already owned by the wealthy. The middle class got nothing, and prices rose even higher. So once again, money creation saved the top and crushed the bottom. Hidden taxes are another trick. Governments don't directly say, we're raising your income tax, but they take it anyway, through our price hikes, fuel taxes, and inflation. Inflation is the biggest hidden tax. Never forget that. When prices rise faster than wages, you pay the difference out of your own pocket. The government reduces its debt and your savings become worthless. Regulations are also part of the same game. They're supposed to protect the people, but they mostly help big corporations, railways, oil companies, and today's tech giants. Who do you think writes the rules? They do. So when the government says, we're protecting you, it's usually a way to crush competition. The public sees safety, companies see profit. Wars? Same story. During World War I and II, they said, support your country, buy bonds. People bought them patriotically, but those bonds were risk-free investments for the rich. In the 21st century, it's the same. The Iraq and Afghanistan wars cost trillions of dollars. Who profited? The defense industry. Who paid? The taxpayers. And finally, the complexity trick. Tax codes have thousands of pages. Financial terms are so complicated that even professionals struggle. Budgets are full of hidden clauses, jargon. This complexity is a deliberate curtain. They make sure you, me, all of us, don't understand where the money goes. Because if people don't understand it, they won't react. In ancient Rome, the trick was worthless coins. Today it's hidden in screens and balance sheets. But the scam is the same. Keep you from understanding, so robbing you becomes easier. Even today, the same thing is happening. Inflation eats away your money, government debt grows, markets shake, and the so-called rescues return. Central banks keep printing money, and the bill always lands on the people. The system is built in such a way that you work harder, but actually earn less, and no one even realizes it. The ones at the top just keep getting stronger. History teaches us one thing. These tricks always come back. In Rome, they devalued money and crushed the people. In the Middle Ages, they robbed the merchants, and today, we're living through the same story. Times change, but the method stays the same. And here's the bitter truth. Most people don't even notice. They think inflation is normal, taxes are a duty, bailouts are patriotism. But these are just parts of the game, because governments never want the public to be financially aware. Financial knowledge is resistance. Economic history is a weapon. If you know the tricks, it becomes harder for them to deceive you. So, when you watch the news, ask, who's benefiting from this? When inflation rises, ask, whose interest does this serve? Open your eyes and remember, the system doesn't exist for you. It exists to protect itself. History doesn't repeat exactly, but if you don't understand it, it will crush you. The scams in Rome are the same as today's. The only difference is whether you notice it in time or not. If this gave you a new perspective, subscribe my channel, friend, because the answers are written in history, and I'll show you where to look.